let's get it started, right? So I want to cover over a few trades today. Now, NVIDIA, I will go over here. We'll just maximize this sell. I don't have to have all, well, yeah, I guess I will. Where's 9 o'clock? Okay. So we can see here right off the open, okay, it dips down a little bit. And let's see, right? Yeah, this is on the 1 minute chart. Normally off the open, I'm always looking at the 1 minute. But I wanted to cover over kind of my pre-market channel strategy, just so you guys have a kind of clear understanding of what I'm labeling each morning and why. So I mark a demand here. I normally do this on the 5 minutes, but I do these each morning, right? For those in the Discord, you guys know I do this around 8:15, 8:20 or so. But noticing a demand zone, supply zone, but also marking my previous day low as well as a pre-market high, which aligned with this high before close, as well as the pre-market low. Okay, those are pretty crucial levels for me, especially when it comes to trading. Sometimes I don't respect them just because I can be kind of overly biased, which I preach not to be, but those emotions, they do get wrapped in the trade, and you can try to help them as much as you can, but they never go away. But I can see here a large upper wick on this high before close. I'm going to mark that as supply, and this doji candle here was a good enough range for me to be able to mark a demand zone. Okay, key levels at pre-market low and everything like that, as well as I had a note here from this morning in the watch list. Let me open it up. Right, this was from the plan this morning, but let me zoom. There you go. Right here we can see same chart, right? There's the plan. I deleted this because it was in the way, but I said the 200 EMA reaction is crucial to the trend, right? And this is on the 5 minute. I'm always talking about the 200 EMA on the 5 minute. It's very, very crucial. Why is that? In most cases, it is used as a major resistance or support. Okay, we can see here when it breaks gaps above, support, 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 until you get a break and a base on this kind of smaller time frame 5 minute move here, and then it signifies a downtrend. So when it goes below it very strongly, like we see here, it's typically going to be used as resistance. So resistance point there, dark pool, resistance on that day, and we were looking at it today as well. So off of the open, right, I'm always saying off the open, guys, if you're not experienced or if you don't have a proper control of risk management over your emotions, then you really should avoid trading the open. And I'm always trading these things in a scalp. I don't care if it dumps 20 more points in front of me. I have to do with what's consistent. A dump of 20 points is not consistent. That is an anomaly. So I know that normally if I'm trading just strictly off the open, I should be taking profit very quickly and maybe leaving a small portion to ride or something like that. So I have here this morning, right, I scalped the Qualcomm and QQQ calls this morning, as well as NVIDIA, the 290 calls. Those were a little bit further out, so they didn't move as much as I wanted. But the main thing that I was talking about was this reaction of the 5 minute 200 EMA, and we can see here normally, since I talk about it being a strong resistance or support, and when a strong resistance or support is broken through, that signifies a strong trend. So I go long here, noting that, hey, there's this wick right there that's going to be acting as support. But when we push up, I see a strong kind of close resemblance to a tweezer top. Okay, I really see the tweezer top on the 10 minute. When I see that tweezer top on the 10 minute, right, this hasn't closed yet, I close my long out and I go short. Okay, now when I go short, right, it's a very quick kind of move here, but this was confirmed because QQQ had the same exact look to it, right? Let me clear this chart out. Let me go on the 5 minute. I'm going to just mark where the orange arrow is going to be for the 200 EMA, right? So come on, edit properties, orange for the 200 EMA. Now I want to go on the 5 minute, or the 10 minute, excuse me. And I can see here that we got a tweezer top. I see the 200 EMA is there, a tweezer top on a pivot. Okay, now what happened here? We got a lower high, a lower low, a lower high, a higher low, and then a higher high. Normally, whenever we get a higher high, we see a dip, and that dip is going to resemblance, or that dip is going to, possibly set us up for a higher low. Okay, so we get a higher high. We break over the pre-market high. I see this tweezer top here. It was really weak in my eyes, especially a 10-minute. Remember, the larger the time frame, and displaying this kind of formation here, or candlestick pattern, it weighs more the larger the time frame. Okay, why is that? Because it shows more orders there, and larger traders are going to be respecting this larger time frame. So this tweezer top here, I take the short on QQQ as well as Nvidia. I take the what was the put? I take the 383 puts, right? But I'll go back to Nvidia just so we can stay on track here. And off of the open, right, I take this because of that, but I'm executing on the 1 minute. Okay, let's get back to today. So we take a short after we see this tweezer top here around this area very early, but let's say you miss all that. Let me just clear everything off now. Okay, completely clean chart. In your review, this is what you should be doing. Okay, yes, we've marked the tweezer top on the 10-minute, but understanding why moves happen is the biggest thing that will help you in your trading career. Okay, so going through, like, if you're like, hey, why did this reverse in such a strong bearish kind of move? I really don't know why, right? Go through and try to find any bearish signal that would have allowed you to understand this movement live during the market open. Okay, so I can go through here, right? 9 EMA crosses below the 20 EMA. That's a sell signal. VWAP break, that's pretty bearish, but when VWAP breaks down and bases, uses that 20 EMA as support for the short, right, and then shoots off, right, that was another confirmation. Okay, now we also got the tweezer top up here, so the tweezer top area, that was a strong bearish confirmation. And then when we come down here, right, it holds the support. So anything it bounces off of in a major downtrend, you want to mark a support. Okay, so you mark that support line. It rejects off VWAP, so it adds to that. This is a lower high in this now micro trend, and now when it retests this 200 EMA on the 1 minute, which is something I don't typically do, we're really looking at the support here, right? It fails through. Now, if you don't have to be as lag, right, that's through your review. It's something that you can understand. Now, bringing it to the live market, right? We're talking about applying strategies learned in review to the live market, right? When market is open and we're not looking at things in hindsight and getting kind of a thesis based off of that. You have to develop this very quickly and be able to break down information rather quickly as well. So I can see here on my 9 and 20 EMAs on the 1 minute, I only really like to use them on high volatile momentum. Otherwise, I'm looking at the 3 minute, right? 3 or 5 minute. But most of the time on high momentum, the 1 minute EMAs will suffice. It'll allow you to get those entries that you normally wouldn't have seen if you're not using them, or if you're using too large of a time frame. So we can see here 9 crosses below. The 9 EMA is like a dip entry. Okay, that's like your dip entry, and then the 20 EMA here is for a larger dip add, or you're going to use it as your risk, right? Your stop out in most cases. So 9 EMA tap, entry there. Another 9 EMA tap on here, entry. 9 EMA tap, another entry, 2 here, right? And another one there. Now, also understanding the strength of the move. Okay, now I know that we have seen Nvidia dump. Okay, we've seen it dump and the day prior. If I go back a couple more days, and the day prior, right, it's dumped. We have expected that, but it has to break through its key levels. Remember from pre-market here, I marked this pre-market low. Okay, right there, pre-market lows right there. Now, if I draw this line, I can't base all of my trades on the 1 minute, right? I'm constantly flipping through the 5 or the 10, just getting a stronger kind of thesis. Okay, so going through here, we're going to look at the 5 minute chart. and I want to talk about, understanding price action. This is a huge problem because a lot of traders think that, hey, I just need to buy big green candles or sell on big red candles, whatever else. But there's so much information here displayed on these little candlesticks, okay? If you don't already know a candlestick, this high obviously is the high. This is the open on a red candle. This is the low, and this is the close, right? This is on the red candle. On a green candle, okay, it's a bit, oh, hold on. I'll go back and fix it. On a green candle, right, let's use this one, for example, or this one is better. That's your low, okay? But on a green candle, this is your open, this is your high, and that's your close, of course, right? Very basic information, but a lot of information that you can read off of that and place yourself in an entry due to understanding these candlesticks. So I had this got deleted. So on the 5-minute chart, right, the 1 minute was rather clunky. You're not going to really see too much. Maybe you're overwhelmed with the short bias here because we are shoving down. We break the low of the day. Now, when we break a key level, you should scale, right? We talk about consistencies, and we need to be able to lock in profit and offload risk all of the time. Now, I know some of you are trading 1 or 2 contracts, but 1 or 2 contracts, right, you should trade those like you're trading 10 or 20 contracts, right? You have to be able to set good habits and, visualize yourself trading as you would be if you were, maybe taking on much more risk because you had a larger account or much more successful or confident in the market. So going through it, right, there's a lot you may have shorted here on this 9 EMA, but noticing that yes, that level has broken. And if we go back here to the plans, what do I say? BNB is break and base, right? So break and base below pre-market low. We all know what a break and base is. It's a retest. Okay, now if we bounce out of demand, that's the other situation at hand. Okay, I always talk about situations, never just triggers, because you have to be open to both sides, right? The dialogue between bears and bulls all of the time in the market. On the 5-minute, the candle does not close below here. You get 2 candles not closing below. This candle wicks below, right? Little wick. And then the second one, a big hammer candle, which is a kind of hammer or a signal for reversal. A very strong bullish candle there. Same thing as inverted hammers. But near a pivot point. Okay, I can see here, oh, that's an inverted hammer. But it's not at a pivot point. Okay, this was an inverted hammer and it had a strong reaction. So think about that in context when you're thinking when you're trading price action, right? Just because you get an inverted hammer in the middle of this, right? It's got to be near a point of reflection. So, this was a high up here, right? Look at this. Right? If I draw that and draw this big upper wick there, right? That was on that zone, right? Down here, this was the pre-market low. That's a key level, so that's a pivot. This is a possible point of reversal. So when we see this big rejection candle, okay, from the short or from the longs coming in, stepping in, then we need to be able to manage our position very closely. Okay, this is the same trade. I think it was on Nvidia or maybe AMD that someone took, but they took the short up here with us and wrote it down to 130% and didn't stop out till probably about this range, until about this range right there, which was too late. So we've talked about scaling in. Now, how would I have scaled out, right? I'm always looking at the 1 minute when I'm scaling in and out of my positions here. But we've talked about pivot points. I'm sure you guys have all seen the YouTube channel or the YouTube video of the pivot points that I put out. If not, please check that out. It'll help you with a lot of the context that you may need in the market. But moving through here, these entries, okay, a lot of times weak shorts will stop out on the pullbacks, right? These pullbacks are pit stops to allow those shorts, those late shorts into the trend. So when you're moving through here, this is a crucial area to put your stop. Okay, so like let's say, This would be the stop, right? It pushes up. I'm not afraid because that kind of aligns with the 200 or 20 EMA, and it's relatively close. I probably wouldn't have wanted to hold it too high, but if you're getting an entry here, right, that's going to be your stop. Why? Because that would negate the lower high trend that's at hand, right? What's happening here? Lower high, lower high, lower, right? Consecutive lower highs. So moving through, right, marking this one, then this one, and this one. They may not be perfect. Okay, moving through. Now, when this pulls down and pulls up, okay, now remember, when you scale out, there's two different things. One, controlling your stop loss, and two, scaling out to lock in profit, right? Because when you are getting hit for your stop loss, you are locking in profit or offloading risk, but you're closing out your position. Okay, so you're not getting the max kind of profitability for that trade. So a good rule of thumb here, okay, when you are making fresh lows, so I've done all the lower highs, right? When you're getting fresh lows, so when I'm talking about fresh lows, like, this breaking, right? This breaking, okay, and then like this breaking. When you're getting a strong crucial support shoving down and you're getting a lower low, on that momentum, you need to be scaling out. How am I scaling out? Right here on Active Trader. This one's not accurate. I'm either, I'll write this out, on Momo Move, join the ask. All other times, selling bid with no fill, then I market sell. All right, so when I'm talking about on a momentum move here, these big red candles, it doesn't matter if you scale out right there. Sure, you might be like, oh man, it dumped more. Okay, but who's to say that you would really scale all the way out at the bottom? All right, do you trust yourself to do that? It's not a bad idea. Now, depending upon what candle you're scaling out on, the more experienced you are, you can see, hey, strong red candle, I'm going to hold on to it for a little bit more because that's going to, invoke a lot of panic selling, and short sellers are going to be attracted to that, right? Those FOMO short sellers. So if I have a short from here, I'm going to let them do the work. But if I start to see the selling kind of dissipate, right? Bottoming wicks on these candles, smaller, the first green candle right there, that gives you a minute. Right? That's a strong move to sell. Now, you're not going to get filled on the ask. You either sell the bid or you market sell. Okay? Normally on QQQ or NVIDIA, it's very liquid and the spreads are very tight. So, right, going through here, you want to sell on momentum. Okay? Scaling out of momentum. And if you can't get out, sell your bid. Or if no fill, then you market sell, right? You just need to get out. Okay, because what happens here? We talked about moving your stop loss up. So let's say you enter there, right there where that white arrow is. Okay, and you get a good short, and maybe you scale some, maybe you don't. But if it comes back up to you, and you see that the 9 EMA is the trend that's been respected, and it blows through the 9 EMA, you can either stop out there or you keep your stop at break even, because most of the time you're going to hold up to the 20 EMA, depending upon the momentum of the trend. But I can see that one, we were extended, we shoved off of this upper pre-market high area, and rejected off of this pre-market low right there. We saw the 5-minute bottoming wick. So that's kind of how I am trading and finding entries. As you guys, for everyone that was in the, on the stream, watching the stream today, you guys saw it all unravel live. You can all go back and watch that if you want to watch how we traded and took those entries, right? We also traded QQQ off of the same thesis. And this is really why I enjoy trading QQQ and its holdings, because the tickers all kind of align with each other, right? If I go here on the 10-minute, 10-minute tweezer top, right? If I go here on NVIDIA, and look, on NVIDIA, oh, hold on. On NVIDIA, 10-minute tweezer top. Let's go to AMD, right? not so much a tweezer top, but you don't have to have that big upper wick following. The main thing about a tweezer top is seeing where the shorts came in and placed their order, right? They're not letting anything close above this trend line right there. Okay, that's the main thing with the tweezer top. You don't have to have symmetrical upper wicks. The main thing is watching the body close, okay, or body open. Yes, first I trade live every day, 4 to 6 hours a day, annoying everyone who gives me the time to listen, right? So, you know, Microsoft, it hasn't been following it so much, but you get the same thing, right? Tweezer top on the 10-minute, no candle closing. Let me clear this off. Hold on, I want to kind of leave that, so that has the plans. You know, but look at the candle, right? See the body, no candle closing above. That's a strong area for a short. And a lot of times on the Qs or any kind of large cap options, you get a big shove in one direction and then it reverses, right? Not so much on Microsoft. It's been a pretty dumpy stock for the time being. But like here, like on AMD, right? Shove down really violently, pop up, and then it continues, right? Same thing here. This was a different kind of dump day. Right, shoves up. You're going to get a pullback at some point, but you have to gauge the strength of that pullback. Let me go here on QQQ. Quickly define definition of tweezer tops. A tweezer top, you know, you're going to have 2 points right here. You guys have tweezers, right? Maybe not. If you got like bushy eyebrows or something, you know, sorry, but you know, you got tweezers at home, right? It's just like these top 2 upper wicks here, right? Something that one, the name is something very identifiable, but what it shows here, if I'm talking about raw price action, okay, just simply about what buyers and sellers are doing, okay, for a buyer to close a candle up into this wick would mean that the seller is faulting a little bit, okay, that means, or faltering a little bit. That means that, you know, he's weakening his position, he's not defending it as much, anything like that. Is the library only for the members? Yeah. Yep. If you go to the Start Here channel, that's where the Google Drive is with, I think, like 80 plus videos now. So, you know, when you have this, that means, hey, buyers could not push above this line right here, right? Remove this. Buyers could not push above that price level, that 385.46, which is practically that psych number, 385, you know, 50, which, you know, that's your half, your, you know, 50-cent psych. So you can see here, no buyers allowing to shove up here. You can kind of see it right there. Okay, I want to touch on the doji. I could go over the QQQ trade. It's the same thing as NVIDIA, so there's really not anything to really cover that's different, so I don't want to waste your time through repetition. But, you know, look at this low, after hour low level. Guys, dude, forget the watch list, forget your inside bar trigger. Learn how to chart, learn how to read price action. That is the biggest thing. You know, you're not going to get your glory and, you know, money and independence and freedom of life through some kind of dinky watch list, okay, that someone just types up from a... I mean, this is literally what they do. Personal watch list. Look, this is, you know, inside bar scanner. Oh, look, there's my watch list. Let me post it to everyone and blindly post it, right? It's all bullshit. So, going through here, enough of the rant. Back on track here, right? Mark your levels, understand key levels, right? Why did buyers step in here? Because it was a key level. Okay, we can see very clearly, hey, buyers, all buyers and sellers want, they just want a level to base risk off of. That's it. They just want a level to base risk off of and to see if it's going to work out. If it doesn't work out, then you're done, right? So what happened with the short here? There's the high of the day. The short's going to have the stop near the high of the day. Remember, never look at your stop loss or the high of the day, whatever, as a finite line, right? A very just, you know, just a line. Look at it as an area always, okay? Because, you know, this is what the short did. They saw this candle here on the 10-minute. The following next 10-minute candle, they're like, hey, if price pushes up here, I'm going to short this with a stop of high of the day. Okay? Now, this comes down here, hey, you know, 380.74, you know, they're probably going to hold it down to 380 under this, but we see buyers absorbing everything under the pre-market low level. Okay. Um, yeah, we're not adding anymore, bro. It's for the birds. Exactly, it's for the birds. Except TOS charges 65 cents per contract. Isn't Webull better for options then? I mean, it's really up to your preference. I can execute on Webull or whatever. It's just your preference. If you're scared about the 65 cents, you can message them. Really, just go to support, message them, say I want to get my contracts lowered. Maybe they'll dump it down to 50 cents, or I've seen some people get like 40 cents or so. So an 80-cent round trip or $1 round trip. It's really not too bad. This is why I have been enjoying trading Nvidia, because the contracts are a little bit more, but they move very strongly, right? I've been trading contracts from like $2 to $4, that kind of range. Compared to like a 50-cent QQQ contract, right? You got to buy 4 of those just for a net kind of position of $200, right? And I'm talking in terms of, newer traders trading. But then you're gonna pay, that 65 cents, on a round trip 4 times. So instead of, hey, if I buy a $200 Nvidia contract, that's a 65 cents one way, 65 cents the other way. Cost me $1.30 if I haven't had my fees negotiated. But yeah, just go to the support. If you're listening, big tip, go to the support right here, right? Contact them, whatever, and say, hey, I would like to get my options fee or whatever, lowered, and they'll put in a ticket for you, and it should get approved. So, yeah, exactly. Yeah, $1.20. I mean, guys, I'm gonna go through here, through the Twitter kind of recap from today. Where's it at? Oh, right here. So, right here, like, look, 118 to 289, right? That's $170 for one contract. 184 to 446, 179 to 217, right? That was only like $37 a contract, $38, whatever, but that's still a lot. I'm not really going to complain about a couple bucks here or there, but it does rack up if you're a high kind of volume trader. This 126 to 440, oh, sheesh, bro, $314 a contract. That was the one off of the open that was sick. So I'm not really worried about a couple bones here and there. But, if you are not confident in your trading style, and you find yourself stopping out rather quickly and stuff, or getting racked up on fees, then going to Webull is not a bad idea, right? Because it's practically free. Okay, just making sure that it's still on. But yeah, I mean, going through here, I was going to talk about this doji method. Okay, we've talked about, how to apply sort of strategies to your live kind of trading, as well as, scaling in and out, moving your stop loss along the way. I hate seeing when traders, this is the same chart, so I'll just go through it, but I hate seeing like when traders, they take a good trade, right? Whether because it's like called out on stream, or they've taken it themselves. So you've gotten the good trade, but you remember, always weigh, where is my exit? Where is my stop loss? Just because you enter here and your original stop loss was there does not mean that it stays there, right? It should be moving down with the momentum, just in case that if something like this does happen, this big move up, you're going to be able to offload all of your risk and lock in that profit and be rewarded for your time shoving down. If you go from, a big mover down there 100+%, and then you only get to sell it for 30%, that is not only losing monetary capital, but it's also losing a lot of mental capital. You're going to go through a lot of emotions and possibly, trigger some sense of revenge trading or anything like that. So doji method, yep, let's do it. Right, I've been going through this and just kind of delving into some basic things a bit more, because I know a lot of people know about dojis or know about pivot points or this or that, but I really want to delve into it a bit more and give it my kind of point of view through educating, right? Because at the end of the day, everyone can explain it one way or the next, but I try to break it down as the most simple kind of method that a trader can understand, right? I've been in your shoes before, and a lot of the kind of understandings or breakdowns of some things, right, kind of went over my head at the beginning just because I didn't have a clear understanding of price action or really how the chart moved. So when you get a doji candle like this, okay, after a big move up, okay, big strong move up here, and then you get a doji candle, right? Just like I told you about this line here, right? Sellers come here and they set an order, right? They put their ask right there and they don't let any buyers go over it until maybe they get exhausted or something, and keeping a stop, you know, in a general area. A lot of times, you know, they can hold on for a bit longer because they have much more capital, meaning that the losses are not as detrimental to them. Don't we sell based on price action? So how do we set a stop loss? I have a mental stop loss, so I'm constantly watching the pivot points, watching my EMAs. If you wanted to, you know, I mean, look, here, I'll just go through very simply. Let's say that, hey, I'm an EMA trader, right? This is just a random example, right? I'm an EMA trader. I see that, hey, oh, when my edge is presented, I see an EMA being respected. So I want to stay in that trade as long as that EMA is respected. I've talked about this. Why does this work out? Why does the 9 and 20 work out so much? Okay, HFTs, which is high frequency trading, you know, algorithms, they use this. Market makers use this. Banks use this. Okay, find a time frame that the 9 and 20 EMAs are adhering to and respecting, and trade alongside that until it doesn't work anymore. We can see 9 EMA respect, respect, respect. When you get the first candle closing over the 9 EMA and you took a big move down, you should just get out. Just get out, right? Lock it in, especially near support. If it continues to dump, okay, like we did on the other day here on QQQ, remember, just like we did on the other day, where you at here? Come on now. Okay, yeah, if let's say that, right here, it's following the 9 EMA and you get stopped out right there, okay? Let's say that you do. What happens after? If you were wrong, you could re-enter on the 84% rule. So let's say that you had an entry there, you stopped out there, and price comes back down on momentum. The 84% rule grants that you should take it, right? Also, if you don't trade that, if you're not quick enough to trade the 84% rule, a true runner is going to always provide you opportunity, okay? Now, I've talked about this as well. This is kind of getting off topic, you know, but from the doji kind of strat, but I will go through that as well. But, you know, if you're not getting any entries on the 9 EMA, you're not getting anything respecting here, okay, you need to be watching your 1 minute candles candle by candle. Going through here, no 9 EMA tap, but we break a key level here. Look at the candles, right? There's your high. Hold on. There's your high. There's another high, right? Lower high, lower high, lower high, right? Staying in the trade because all the lower highs, right? Isn't it so simple? Okay, now when it's on strong momentum, let's say that, hey, I don't know, there's no 9 EMA tap. I want to get in on this momentum because it's fresh off of this consolidation range, right? I take a short there. Where's my stop? The most recent high. Oh, it moves down and down. Oh, let's say that I didn't grab that one. Let's say I was a little bit later. Okay. Oh, I'm going to grab this one. Where's my stop? The most recent high. Okay, and so on and so forth. All until you can't do it anymore. Okay, so that's just kind of a quick rule of thumb how to do that. So you did that exact 84% rule live, by the way, on that day. I'm almost positive. Yeah. You know, if you miss your trade, right, if you're trading one contract even, it doesn't matter as long as you walk away with a green trade. Who cares? You're going to leave money on the table. You will always leave money on the table. No one out there is getting from point A to point B the entire move. Nobody, right? I've said this. Your job as a retail trader in the market is to take the meat of the move, not the top and the bottom. It's fun to get the top and the bottom, right? But it's not always going to happen. Maybe you get the bottom ad, but you sell right there, and you're like, oh man, I could have held that on longer. Who cares, right? Don't waste any energy on it. It's all noise. It's all just a waste of time, and it's just going to stray you away from focusing on the price action and the multiple opportunities after. Oh, I sold right there. 90 EMA tap, 90 EMA tap, 20 EMA tap, tap, tap. I mean, look, guys, so many things. What you don't want to do is if you sell early, I'll just mark this one as red from the original sell if you bought down here. If you sell early right here, you do not want to FOMO in the middle of these candles, right? You are not a buyer on big green candles. Okay, you're not. What happens every time you buy a big green candle? It pulls back on you. And most of the time, to be quite honest, retail traders are buying long where you should be going short. Okay, so really think about that. Okay, wait. Oh, I sold that. I want to continue to make profit. If you want to continue to make profit and jump in the trend, don't FOMO. No big green candles. You go long on downticks and you go short on upticks. Okay, it's just how the market works. You have to wrap your mind around that. Let me look at some things I went over. Scaling in and out. Also, no fighting the trend. So, like I've talked about here, you can if your trading style and kind of strategy is scalping, then by all means. But if you're just figuring out who you are as a trader, then there's no reason to go short, go long, go short, go long, go short, go. You're gonna lose your mind. What I like to do is, if I see like, hey, what is signifying a bullish trend here? 9 EMA crossed the 20 right there. VWAP broke and base retested. Remember, it doesn't have to be above, right? It just has to break it, retest, and hold. So pull back here. There's that confirmation. Break strongly over the 200 and VWAP there, right? And then a 9 EMA tap. So if I have all of these and I haven't taken an entry quite yet, then I need to be able to align myself into a strong entry with patience. But I don't want to fight the trend. I don't want to be early. I don't want to be the first person to be able to get into a short or time the reversal or anything. I want to trade alongside that trend until I can't anymore. Okay, but also understanding that later entries dictate quicker profit taking. I do not have the luxury anymore of these traders who bought down here and did all of the work. But what I can do is piggyback on their hard work and make money. So, right there, here, right, you want to wait for it to downtick to enter the trade, right? Instead of going back and forth, going through a lot of emotions, taking in too much information candle by candle, right? But focusing, hey, when this thing is dipping, where is it going to bounce? Where is it possibly going to bounce, right? And you might be like, hey, Maple, the 1 minute 20 EMA failed there. The higher low didn't. Okay, the 3 minute didn't. 3 minute was perfect. Okay, don't get stuck on one time frame. And also, don't fight the trend. That was the moral of that kind of conversation or that topic. Going through here. Open range candle held support, right? Nice, Kawasaki. How to trade consolidation and chop. Okay. Obviously, you want to find a supply or demand zone on a larger time frame. Typically, the 10 minute. 10 minutes pretty good. And what you're going to do here, okay, if you're trying to trade the chop, and you're getting chopped up already, then you're experiencing, hey, it's pretty choppy. What do I need to do? You can mark a major supply here, okay, and then mark a demand off the low. Now, all you really need to be able to do is, trade between these two. Now, this demand or this supply here is too far up, right? So if it's too far up and you see a much more fresh zone, then trade that zone. So maybe you mark this or you mark this. For the kind of example here, I like this wick. Okay, it's the most recent high that needs to be broken for a higher high, right? Yeah, you could have marked this zone, right, which would have been completely fine, but this right here would have allowed you to see that, hey, if price comes back down, we got to break over this point first, right? This is on the 10 minutes, so it's pretty significant. So now what we're seeing here are two zones, right? We're channeling. This is how you trade chop. If you can see that we're trading chop because one, it's after lunch, and two, there's a lot of small body candles with a lot of wicks, then you can start to adapt. You should be adapting to the trade. You should understand that, hey, I need to be taking profit quicker. If I buy in the zone and I take it to the other zone, I needed scale, right? One of my favorite trades is zone to zone, all right? And why is that? Because it gives me a clear price target and it gives me a defined stop loss. So let's say you take any entry in this range here, right? Let's say you take this entry. You can see that, hey, there was a zone right here. When it pushes up, I need to scale out. Now, it's really dependent upon yourself if you're going to scale out entirely or if you're just going to hold a core, right? Normally, I scale out some. If I'm scalping, I'll just sell all of it. But, if you sell a little bit there, holding onto a core, it dips back down. If it comes back up and it doesn't have the momentum to break the previous high, you need to get all out or scale more, right? And if you're short, you see that, hey, there's a big upper wick here and a lot of other upper wicks, right? Showing a very large supply. I can draw just this general area as a supply zone, right? Just because all the upper wicks. You could short here, right? Giving you an area to base kind of risk off of. Now, I know you have to wait for the candle to close typically, but, this is a strong inverted hammer on the 10 minute. So taking a short there. In the zone, right, you only take a short where you have an area to define a strong risk level based off of. Okay, so short there, two more shorts here when it pops up, and another short, right? We talk about how to trade chop. If you find yourself, remember, in the pop quiz today, I talked about members going through, right, what was let me find it. The pop quiz, I said, reflect on how many trades you took today. Did you take too many or did you focus on quality setups? Let me know. Post one chart of a trade you took, but clear it off and only show your buys and sells. No TA, reply to this message and post here in Stacks chat. So going through here, right, let me go to the, right here. Darkwing Duck did it, okay? What this exercise does, I tell every trader that I talk to that's having problems in the market. But what this does is allow you to, aside from all TA, all of this or that, but it shows you where you're reacting to on the chart when you take an entry. Okay, and where you're reacting to on the chart when you're stopping out or selling or scaling out, right? And you'll find yourself, it can be really embarrassing at times. Trust me, you'll go through in hindsight and be like, what the hell was I doing, right? Why did I buy there? Why did I sell there? I'm getting wicked out, or that you're going to learn so much from this because all of us can go be like, oh man, that was a crap day, right? That sucked. We're going to have a better day tomorrow, but not really bettering yourself. That doesn't really do anything for your trading. So dig a little deeper, try to do this at least once or twice a night of your trades. But, marking your buys and sells on a completely clean chart, no TA or anything. Maybe after the fact you can go through and mark some TA, but you really need to see just through raw price action and where you were buying and selling to, develop a stronger kind of understanding of your trading style. So, right, I said all the longs were in here and all the sells were in here, right? What if, remember, I don't ever blindly add a zone. I'm very much so a reactive trader. So if I am waiting to go long on this zone, right, we need to take more things into account. The higher lows are getting broken. There's your higher low. There's your higher low here, but it wicks. But look at the cursor, right? You can see there's a line, right? It wicks below it just a little bit. It's not as strong. And if it does break like that, you need to see a higher high. So we're getting consecutive high, lower high, and lower high. Okay, the short trend is very much so there. Now, when I see this reaction to the demand, it tells me that buyers have stopped out, right? They're starting to sell. And a big misconception that I see from traders, hold on. Where'd I go? Where'd it go here? Okay. It's not even the right day, but it's just going through chop. This is just the example. When I see traders, right, going through here and blindly buying or anything, or buying within this middle zone, right, that causes a lot of problem and just, you know, frustration and anger and anxiety, and you're not giving yourself the correct chance to, you know, give yourself what you know, the experience that you need to be a successful trader. But when you see a support break for newer traders, this is why we don't short down ticks, okay? Because when we're shorting, I hate breakout trading, right? It's not a good method of trading, right? It's very stressful and frantic and very shoddy, right? It's not very accurate or consistent. So, you know, when we have this demand here, right? A demand is just telling me where buyers are most recently, right? In an area that's crucial for them to defend their position. It's also aligned here on VWAP. Now, the problem is with newer retail traders, like, oh, I'm going to add to the power, to the strength of breaking this down, right? But maybe not here. And that's the wrong idea, okay? Because the only reason why you get a strong bearish reaction like this is because, one, you have the pressure from the sellers. And the pressure from the sellers only pushes it down to this range, right? It's like playing tennis. You know, it's like, oh, you know, hitting it back and forth and back and watching the reaction, right, when you're trading chop. So the pressure from the sellers pushes it down. Now you want to watch the reaction from the longs, right, the buyers. Are the buyers going to stop out here? And if they do stop out, that means that it's 2 times the sellers, right? Because a seller turns into a buyer, right? The shorts have to buy in order to cover, and the buyers, right, are inevitably going to turn into sellers at some point. So when you have pressure from the sellers shoving it down, and then you see that their zone is getting overtaken, right, then you get pressure from the selling pressure from the buyers. Selling pressure from buyers stopping out, right? That's when you get the pressure from the buyer stopping out, and then you have 2 times the selling pressure. That's why the sell volume here is overtaken, right? And look at the reaction, right? Pay attention. Don't force yourself. I mean, how many people on this day, I don't know if you remember or not, it was that flag before the big dump, right? How many people on this day got churned up right here, churned their accounts, and then saw it dump the rest of the day and was like, oh my God, you know? But I'll go over a few more things and I'm going to wrap it up here. I think we need to go over the doji method. Someone was talking about it. How often do I look at volume? Every now and then. It's not something I really weigh too much anymore. You know, price action tells me a lot just by being able to understand it, but really not too often anymore. You know, I look at the daily more than anything in the 4-hour. But let's see, this doji, right? Let me clear this off again. Now, I've gone through this and back tested it, you know, for over a year now, but just really paying attention to what dojis kind of signify. So when you get a big push up here, right, it shows a strong buying pressure here from the lower wick and a strong selling pressure here from the upper wick, right? So when you get that, you need to draw a zone on the body. Okay, you draw a zone on the body. That's your line in the sand. This is a game of tug and war, or yeah, right, tug of war. So going through here, the goal for sellers is to close in the lower wick. The goal for buyers is to close in the upper wick. Okay, now it has to be a strong candle. I sat here and watched this doji kind of strat, or you know, set up here for about 30 minutes, almost 40 minutes. And what, you know, look at what happened here. You didn't get a strong bottoming wick because that means this candle closed and opened over here, right? The candle opened right there, but it wasn't a strong candle that closed. You have to see the candle close, whether it be on a smaller time frame, maybe like the 5 or something. But as soon as we get a big red candle closing, right, what happens? You get a big shove down right here, 385.50 all the way down to 385, you know, 40, right? A whole point move. And if you were shorting this, right, you know, you didn't short the downtrend, the sellers gave you plenty of time to get in up here, right? 10 minutes, 20 minutes, 30 minutes. Okay, you should have shorted up here like we were, And when you get a shove down here from 386.70 all the way down to 384, right, 40, 2-point move, right? That's a huge move, right? Especially for the options contracts, maybe a 50% or something, depending on what contract you're trading. But, you know, this doji method is very kind of strong in the sense that, you know, you need to be able to understand price action, especially when it's at a standstill. I would like to go over another example here, but I have to see one, you know, maybe on a smaller time frame. I'm looking right here. Doji bar, draw the body. This is on a 5-minute, so it's going to happen a bit quicker. As soon as the 5-minute body following candle closes below that bottoming wick, right, it continues its downtrend. Okay, let me go through. Let me find another one. I know NQ did it the other day. Maybe I can find it. Whoa, NQ charts are always so laggy. Where was it? What day was it? Right here. This is one. Okay, you see strong momentum. This is a point of, you know, indecision, consolidation. Are you going to see, right, this channel here and the channel low? Okay, but if you want to dig a little bit deeper within that channel, draw your doji, right? Maybe you draw this one. Okay, 5-minute doji, right? You guys have seen this before. The next 5-minute doji at a standstill, right? Tug of war. When this 5-minute candle closes below the bottom wick here of this doji, look at the reaction, right? Very strong reaction to the downside. On that last example, where would I enter, right? We were going on QQQ. I said that, you know, this gave you plenty of time here, right? Let me remove this. This was the doji on the 10-minute, right? Always look at your multiple time frames, right? Doji on the 10-minute. You can see this. Let's go on the 5. Okay, this gave you plenty of time to short, right? Maybe you had you know, your stop loss if you're going short up here. If you get 2 big pushes up there, you know, maybe some paper hand shorts get stopped out, but we see the candles don't close. Okay, so it's showing a pretty weak move there, and on a higher high, you're most likely going to see a higher low being put in, right? Higher high, higher low. So when you short this, you have a big upper wick here. You draw that zone on the upper wick. You want to short all in this upper wick. Okay, let's say you get a short just maybe on the low of that channel if you're a little bit later. This move right there is a very strong move, okay? And it was off of the high of the day. Not a bad area to go short. Then the rest of the day just kind of ranges. I like your strategy of playing in the morning, taking a break and coming back for power. Yeah, you know, exactly. Trading is all about freedom, guys. You know, you guys have seen me. I'm always normally, you know, from 8:15 in the morning to about 1, sometimes 2 o'clock on stream the entire morning, going over plays, calling things out. But I value time. Okay, why are we trading? Yeah, we're trading for money, but I'm trading for time. Okay, I know that, you know, having more money gives me the, you know, the allowance to have more time, but, you know, a lot of you guys hate your job, have gone through a job that you hate. You want to spend more time with your loved ones. You want more free time, right? Trading allows me to value my time much more, right? It's crazy going out, you know, and maybe going to like whatever fast food restaurant and seeing these people getting paid for minimum wage, right? Respect to them, because there has to be people who do those jobs, and a lot of times they're younger people or just not as skilled, and I do respect them. But, you know, I think about that. You know, like, you know, whatever you're paying for gas or milk or whatever, right? You know, 1 hour of their time is $9, right? Or $10, or wherever you're living, right? 1 hour of my time in the market, you know, I can make, you know, thousands of dollars, few $100s, whatever, right, for 1 hour. So if I can go through in 1 hour, or, you know, 5 hours or less, and I'm not saying this now, but, you know, my thought process of replacing my previous job, you know, on average, if you could make $200, you know, in the span of, let's say, 4 or 5 hours, you know, you're getting paid much more, and you're not working your entire day, right? Time is so crucial and important. And you know, a lot of people think about the money and focus on the money. I always traded to live a free life. So you guys see me, I'm normally out 12, 1 o'clock, you know, 2 o'clock, you know, spend time with my fiance. I go to the beach, play tennis, walk the dogs, whatever, you know, just living a better quality of life. And you know, it also goes in the fact that I don't need to be stuck at this screen. You guys see, I'll pop in randomly on Power Hour, and we'll just bang something out on Power Hour. Let's see. So am I often entering positions? Hold on, let me open this up. Am I often entering positions as soon as a candle closes and confirms a trend? Yeah, I mean, like here, if I go on a 1 minute, like on this trade, right, we talked about the tweezer top, but as soon as the candle closed, right, that's a strong move, right? Because what happens? The higher low is negated. We go to the previous day on QQQ. I don't think it was, I think it was the day before, actually, 2 days ago. Yeah, right here. So we take a short, right? We see that this low breaks, but I don't take it there yet. When it closes below VWAP and closes below the previous higher low, that's your short, right? And I know that, you know, oh, it's not a pullback. You talk about pullbacks. When it's strong momentum like this, look at the volume as well. I know I don't look at the volume too much, but sometimes, you know, on high momentum, you've got to look at it. When you see this, candle by candle, we talked about the lower highs, right? There's your stop. Okay, it's moving down. There's my next stop. Oh, still in the trade. There's my next stop. No 9 EMA tap though, no entry, right? Dictated by the EMAs, but there is an entry there through price action. Yeah, sand tennis, bro. I thought that's what it was called. It's like paddleball or whatever. You know, you got the little wooden paddles and the little ball that you hit. I don't know. I thought it was called sand tennis. Missed your answer about the library. Is there any way to access it if not a member? No. Nope. You have to be a member to access the Google Drive, right? And you know, I'll kind of show you guys. It's just gonna pop up. Okay, no, thank God. I did that the other day. I accidentally shared it on stream. But this is the January live session link, right? I refresh this link every month. These are all, just like a live session that we had tonight, these are all of the live sessions previously recorded. They're all about an hour long, and they all are very informational, detailing my strategies, reviews, takeaways from the market, trading psychology lessons, all sorts of different things. And you know, these are very beneficial, right? If I go through here, you know, positive performance, needs improvement for certain aspects of members trading, how to control emotions, applying edge, avoiding over trading, trading and trusting your systematic edge, how to buy high and sell higher, right? We talked about, you know, not having the absolute bottom, of being able to identify an entry on a momentum move, right? For my pre-market channel strategy, psychological think tank group session, 9 and 20 EMA strategy breakdown, supply and demand, problems traders face through CHOP and how to overcome that, analyzing good and bad trading behaviors, right? So many things, right? But this is a very long, I mean, I've been working, you know, my ass off for all of this content here, and being able to provide, you know, what I would say is one of the, you know, top tier kind of educational platforms for newer traders, right? It's not me pumping out some stupid watch list, or, you know, you guys are on stream with me. You guys are listening to me trade this out, my thought process, walking through commentary, and I'm also answering questions throughout the entire day, you know. So, but yeah, that live session link is only available if you join the Discord. And for those you're just market buying, correct? Referring to most of the time, I'm like, if you're getting in on this, you know, I'll try to join the ask. But if I can't get filled, if I need to get into a trade or need to get out of a trade, I'm using the market. Okay. Where is that? Crevera, go to the start here. I need to make like an accept kind of terms thing, so when you guys do join, everyone checks out the start here page. But if you're new and this is your first live session, please go to the Start Here page, and it's going to show you how to navigate through the entire kind of room, or the Discord, as well as at the very bottom here is the January live session link. Okay, but I go through pre-market prep each morning. We dictate market trends. I chart out all of my levels and alerts on NASDAQ and VIX, as well as picking out contracts and some things to be aware of on the chart, right? Whatever we're trading, and I trade not random things, but within my handful of things that I enjoy trading. So, this is the NVIDIA plans. We took it short off of the 200 EMA rejection. Right, and where did it reverse? The pre-market low in this demand area right below it, right? We covered that already. AMD was a good one today as well, right? We do this every morning. I spend about an hour of my time going through pre-market prep. And there's a lot of other good channels in here as well. We did the small account challenge. I just have to update. I've been focusing on my main account just because we're getting such good trend days. Let's see. Show this lander. Yeah, thank you, Karen Nicole. Where in the Discord can I find the lectures? Yeah, go to the Start Here channel, Crivera. Yeah, exactly. Scale, guys. So many times I would be up. I would go long, maybe not off the bottom, but go long here or something like that. And be up, oh man, we're going to have a super strong bullish day. We got the 9 EMA, right? This is 7 minutes into the day. You think the trend is developed or confirmed over 7 minutes? Some days it's like that. Trust me, some days it's like that. But the keyword is some, right? The anomaly. I know that normally if we get a big rip up with nothing justifying, and VIX is still looking bullish, right? VIX is the inverse of most of the indexes. And we get a push up like today. This is a push up, but on the major trend, like a 1 hour, okay, it was not a higher high, right? What would have been a higher high? Right there, okay? Really, this would have been a higher high, but I know sometimes it takes higher lows to get stacked up there. On the 5 minute though, what are we at on our 200 EMA? We're kind of consolidating on it. If we hold and maintain this trend above the 200 EMA, we'll have a bullish trading session. So, good work, Queen. Did you trade your one contract or your one trade for the day? Yeah, exactly. We gotta scale. We gotta scale. So, and the last thing that I'm gonna cover is some emotional kind of understanding going into tomorrow. Right, some trading psychology kind of tips and things to be aware of. This day right here, like some of you guys were mentioning in the very beginning, right on the daily, it was a doji candle. Also, it respected this demand zone. What have we been fighting between? I've been talking about it for months now because it's been going through for months. That consolidation range that I talked about, right? This is more for a swing perspective or, something like that. But buyers have a chance to defend this. Okay, they have a chance to defend this demand. If they get taken out of this demand, we're going to go down to possibly this 200 EMA here. And there's also a gap fill all the way down here, which kind of aligns with that 200 EMA. That would be crazy for the market though, right? Moving from 408 all the way back down to 360s, right? A 10% loss from the all-time high. But it will set up for some strong kind of swings and, rebounds, right? So, but we have a doji candle here, just like we talked about on the doji candle, right? We want to watch very closely to how buyers and sellers are reacting to this upper wick here or this lower wick. So going into tomorrow, right, we talked about the EMA here and how it's used as a trend, right? What it looks like is that we've broken it, and based upon it, right, some dip buyers here on VWAP. But if we maintain above it, then we should start to see some sense of a recuperation, just because the daily chart is set up for that, right? So moving through here, I also have talked about earlier in the Patreon was this. We had 1, 2, 3, 4, 5 green days, right? And I remember seeing the poll and was like, wow, these guys are we're killing it, right? Everyone, we had very little green, maybe 20 or 10 or less or something that had voted. But when we got through this chop, I started seeing a lot of members being red, and that's not through callouts or anything like that. That is through not being able to adapt. We get so caught into the days where the market makers are passing out money. Money is flowing. These are paydays. But we know that that's not sustainable and that that's not going to last forever. And we have to always adapt and understand when chop days occur. So, very strong range or trend days, and then we're range, right? We're channeling here. So, we had a very strong kind of trend here. Now we kind of channeled, but on this move up, we may see before a move up or a move down some sense of consolidation here, okay? Watch very closely how buyers absorb this demand zone. If we do get consolidation, it would kind of show some weakness on their part and a possible move to the downside. But remember, if you have been green, right? I see in the poll today, 60 at 35 green, 71 green from 43 yesterday, 75, 31 the day before, right? 43, 29, right? Going through, if you have been green and have felt like you're on fire, right? The euphoria, the overconfidence, you need to stop, okay? You need to have a clean slate, and you need to come to the market tomorrow with a very clear understanding that, hey, anything can happen. I don't need to be overzealous or overhate or take any trades with too much haste, and I need to be patient, okay? Because how many of you guys lost in the middle, right, in the no man's land today? Okay, but very clearly here we can see, oh, there was a demand noted by these lower wicks, and there was a supply from the original high of the day right there. Everyone in the middle got their account churned. But had you waited and focused your energy on low risk entries, right, you would have been able to take long, giving yourself some good time there. Oh, I want to develop a short strategy or a short thesis. Short, zone to zone all day, guys. Zone to zone. Don't trade the middle, right? This is why I talked about you guys going through on your trades today on a very just blank chart, like so, marking your buys and sells wherever they are, right? Just wherever they are, just mark them, and you need to be able to understand that, hey, am I buying in a really poor area, right? Am I being dictated by emotions? Or it also will show you, hey, this is what I'm doing well. This was a winning trade, and this was why it was a winning trade. So, that's going to wrap it up for me, right? For the live session. Remember, in the Patreon, until the 16th, that is the very last day. I think this is MLK Day on the 17th. I don't know if markets are closed or not on that day, but the 16th, I'm cutting it off. I've already extended it over 2 weeks from the first. And if you want to get in and take advantage of that, then you can, but I'm not going to go through and extend it anymore. So every day live streams, 4 to 6 hours a day, 4 to 6 live lesson sessions just like this a week. Very dedicated to the group. Pre-market prep every morning, making sure everyone's aware of what to look out for, breaking down the indexes as well as VIX and everything like that, and being aware of any kind of meetings or economical events as well. So if you have any questions about the room, please message me on Twitter or Discord. Twitter, you're going to reach me. I watch that much more most of the time. But right, I hope that you guys learned something. I hope that you guys took notes. This will stay up on Twitch, and I think Donuts will be posting it to YouTube as well. So I hope that you guys learned and that this was beneficial. Right, I will see everyone in the Patreon in the morning after 8 o'clock, going through pre-market prep. We're going to go through, pick contracts, go through everything that we do every single day. And then this will be the last Twitch stream tomorrow, trading live, right? I will trade on Twitch sporadically, but I'm going to keep it in the Discord after this week, majority of the time, 95% of the time, right? So good work, guys, right? Thank you guys all for tuning in. Make sure you guys get some rest. Make sure you drink some water as well. And, I'll catch you guys all in the morning to trade. So remember, clean slate tomorrow. No emotional bias, no anger, no fear, no frustration if you lost today. None of that bringing over into tomorrow. And if you were super green today, no overzealous kind of emotions, no euphoria, none of that, right? Completely just in the middle. So Let's see. Yeah, so this is the link to the Patreon. So, yep, I will catch you guys in the morning. And you guys take it easy, right? Have a good night.